Welcome to my presentation in which I'm going to tell you about subjects that I've learned about, that I have an issue with and that I want to learn more about. So let's start with the subjects that I've learned a lot about and that I want to tell you about. Okay, so we will start with the horizontals. I think the support and resistance levels are one of the most important parts in trading because these levels provide certain resistance to price that allows you to act on it. Support and resistance are two concepts in technical analysis. Understanding what these terms mean and their practical application is essential to correctly reading price charts. Price moving because supply and demand. When demand is greater than supply, prices rise. When supply is greater than demand, um, prices fall. Sometimes prices will move sideways as both supply and demand are equal. Sorry. Support and resistance can be found in all charting time periods. Traders also find support and resistance in smaller time frames like 1 minute and 5 minute charts, but the longer the time period, the more significant the support or resistance is. To identify support or resistance, you have to look back at the chart to find significant pause in a price decline or rise. Then look forward to see whether a price halts or reverses as it approaches that level. Many experienced traders will pay attention to past support resistance levels and place trades in anticipation of a future similar reaction at these levels. In a downtrend, prices fall because there's an excess of supply over demand. The lower the prices go, the more attractive price become to those who are waiting on the sidelines to buy the shares. At some level, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, prices will stop falling. So this is the support. Resistance is the opposite of support. Prices move up because there is more demand than supply. As prices move higher, there will come a point when selling will overwhelm the desire to buy. So that was the horizontals. The volume. Looking at volume patterns over time can help get a sense of the strength of conviction behind advances and declines in specific stocks and entire markets. The same is true for option traders, as trading volume is an indicator of an option's current interest. In fact, volume plays an important role in technical analysis and futures prominently among some key technical indicators. Trading volume is a measure of how much a given financial asset has traded in a period of time. For stocks, volume is measured in the number of shares traded. For futures and options, volume is based on how many contracts have changed hands. Traders look to volume to determine liquidity and combine changes in volume with technical indicators to make trading decisions, of course. When analyzing volume, there are usually guidelines used to determine the strength or weakness of a move. As traders, we are more inclined to join strong moves and take no part in moves that show weakness. Or you may even watch for an entry in the opposite direction of the weak move. The next guidelines do not hold true in all situations, but they offer general guidance for trading decisions. So volume indicators can be good for finding trend confirmation, exhaustion moves, bullish signs, volume breakouts, and false breakouts, of course. Volume patterns provide an indication of the strength or conviction behind price advances or declines for a stock or another sector or even the entire market, like I already said. An advance on increasing volume is generally viewed as a bullish signal, while a decline on heavy volume can be interpreted as a bearish signal. New highs or lows on decreasing volume may signal an impending reversal in the price trend. So that was the volume. Then the subject that I have a little bit of a struggle with. So what I find difficult about time frames is which frame should I look at exactly. I know that the higher time frame is more significant to trade, but I find it difficult to determine which time frame to use to determine trends. For example, when I see an uptrend on the 4 hour time frame, it could be a downtrend again on the weekly chart, of course. So yeah, that's really what I struggle with. I find it difficult to determine what kind of trend we are in at that moment. So yeah, so to what time frame do I look? That's something that I run into. So then we have the last subject. This is what I want to learn more about because I haven't seen it yet in coils. A subject. The subject is about the volume profile in TradingView. A volume profile is an advanced charting indicator that displays total volume traded every price level over a user specific time period. Volume profile is an extremely valuable technical analysis tool that is used by traders everywhere. Yeah, the key to volume profiles continued relevancy is yeah, versatility. It is a charting tool that truly does have a wide array of uses. The data that is provided by the volume profile is indisputable, leaving it to the trader to find new and creative ways to do it. So it's all up to yourself. Even though it's in the simplest form, it is a great reactive method for discovering traditional support and resistance areas. Traders are still coming up with these ways to chart the indicator in predictive or proactive ways. I hope to learn more about how to use these volume profiles because, like I said, yeah, I think they're very, very valuable. And yeah, maybe the next weeks there will be a video about it, but yeah, I don't know. So this was my presentation about my subjects. I hope you have learned about my subjects, and I hope to learn even more about these subjects. So thank you.